Alright folks, welcome to today's video. I want to have a bit of a sober discussion with what's going on with Hex. Hex is uniquely interesting on multiple fronts, both the price action wise and fundamental wise. In this video, I want to discuss whether or not it's time to buy the dip for Hex. Now folks, to be very honest with y'all, I have bought the dip on this trend line here, but to be very honest with you, buying Hex right now feels like catching a falling knife. If you catch that knife, great, you got yourself a cool knife. But if you miss, then you cut your hand. And you know, that's kind of what it feels like to buy Hex right now. And I want to kind of address the question, which is Hex a knife worth attempting to catch? Well, I've chosen to make that choice, but I want to go through the pros and cons with what I'm seeing, both price action wise, TA wise, and some of the off chart factors that you guys need to be aware of. This is going to be a very interesting episode discussing some kind of the pros and cons with Hex. So make sure you like and subscribe, hit that bell icon to be notified of new uploads. So folks, there's a lot of very important off chart things that we're going to delve into, but first I want to start off by just making it very clear that Hex's price action is extremely bearish. We have fallen out of a parabolic price structure, putting in macro lower highs and lower lows with no clear signs of reversal. We have high time frame moving averages above us acting as resistance, the 200 exponential moving average on the daily, the 200 simple moving average on the daily EMA ribbons all above us acting as resistance, not to mention previously defined price reactive zones all above us acting as resistance. The only bullish thing going on for Hex is the fact that we're kind of maintaining this trend line, at least for the time being. If we zoom in a bit more to the price action, you can see how I drew this from this wick low to this wick, and we just extend that we can see that's at least where we're finding support, temporarily speaking. Now, it is nice to see that I managed to find one moving average that Hex is managing to hold on to, at least for the moment. This being the 55 exponential moving average on the weekly here. So folks, if Hex were to drop below this level right here and put it in a lower low, that would be very bad, folks, and we could pretty quickly drop to just above 11 cents in my opinion. Because looking here at the order books, I was about to say the order books, but the liquidity distribution for Hex. So on Hex version 2, we can actually see exactly where liquidity is being distributed, and we can actually see that there is not a whole lot of liquidity on the books, folks, below us. I mean, once we get below 16 cents, there's almost no liquidity there until 6 cents, folks, 6.5 cents. So it is fairly possible that if Hex puts in a lower low here, loses 16 cents, that we could experience a dramatic fall. Now, of course, folks, this does not consider the fact that buyers may enter the market on a dip that aren't liquidity providing, and this doesn't include the fact that, you know, that liquidity that we're looking at is only 38.9% of all the liquidity. This is just USDC on version 2. We have USDC on version 3 and the Ethereum pairing as well on both version 2 and 3. So this is not painting the whole picture, but what this does say is that putting in a lower low here just ain't gonna be good, folks. So we really want to see Hex hold the line here. If not 11 cents, 6.5 cents becomes very realistic. But it isn't all doom and gloom, folks. We do have some reason to think that we could be very close to a local bottom here. Not only do we have migraine trendline, but we have the regression rainbow from Gerardo from lookinghex.com. All this is just a model highlighting different support and resistance areas that we've historically respected in the past. So this is not a guarantee that we will continue to respect these trend lines or these levels as support, folks. We may very well break down, but this is just another example of a model showing how we may be up against support right about these regions. And I am personally a fan of buying on support, and due to Hex's massively bullish fundamentals, I personally find the knife catching game with Hex to be a game worthwhile playing. Whether or not that makes sense for you, only you can decide, folks. I'm really not telling people what to do. I'm really trying my best to present both sides of the situation, the bullish and bearish side. Now, something else we should be aware of is that we have massive hex unlocks coming tomorrow and the day after, early December here. So potential selling pressure entering the market tomorrow and the day after. But if we can get past that hump, not a whole lot of new hex unlocks until kind of midway December here on the 17th. So that is something to be aware of. We're going to have a decent bit of potential selling pressure come tomorrow and the day after. So folks, let's before I leave kind of the bearish side here, because I want to kind of paint the bearish picture, let's take a look at our indicators. Everything on the weekly is in a solid downtrend. Looking at the daily here, this daily is not even looking too hot either. We had a bullish crossover recently, but look at this. It's not very strong. Weighted MACD already moving down. Looks like it wants to have a bearish crossover. Weighted MACD acts as a leading indicator for the regular MACD. RSI here not looking too great. Same with the stochastic. The only bit of hopium that Hex has is the fact that the 4-hour MACD ticking up, 4-hour weighted MACD bullish crossover, 4-hour RSI putting in higher lows here, which is good to see, and the stochastic is on its way up. So the lower time frames seem like they may want to experience a bit of a relief rally here, but folks, in the short term, I would really want to see us get above 21 and a half cents for us to start making moves to the upside here, get above some of our major moving averages, and in that case we can start testing some of our trend lines here based off these all-time highs price action, and hopefully in that case we could see bullish continuation. Ultimately, folks, I think Hex is in danger, and we're not out of the clear until we spend time above 34-36 cents. Once Hex gets daily candles opening and closing above this region, in that case, I would say that the downtrend is fully over, and we could test all-time highs and enter price discovery once again. So this is the short-term region. I want the bulls to flip if we want the bulls to be in charge of the short term, and this is kind of like the macro long-term region that the bulls need to take over if they want to continually be in charge over the long term. If not, folks, if we lose this trend line, if we lose the 55 exponential moving average on the weekly, if we put in a lower low, it ain't gonna be good, folks. Not only could we drop, but it's not a question of just dropping. It's a question of the fact that we could, Hex may have just had its cycles blown off top, and going down to 5 cents, a couple cents is always theoretically possible. Now, I don't think that's gonna happen, folks. Well, I, of course, could be wrong, for the same reason that I didn't think Hex was going to break down at these regions. So I was actually very bullish, well, relatively speaking. I always try and present both sides of the argument, but I was bullish, or at the very least optimistic, at these regions. Now, why was I? That's because Pulse Chain is soon coming out, and if you hold onto your tokens and don't panic sell them, you will get all your tokens doubled on a new chain. Essentially meaning if you buy Hex over here and it drops 50%, well, you just broke even because you're going to get double the amount of coins in the near future here. So I made the judgment call. I made a bet that the market that the greed in the market would win out, and due to the snapshot quickly approaching where you could double your bag, greed would take over and there would be added buying pressure, and we would continue along our merry rally here. But fear won out. The fear in the market took over, and we broke our bullish price structure. We broke our bullish parabola, and now we are entering a protracted downtrend that looks like it may continue if we put in a lower low here. But again, for the moment, folks, it's not all doom and gloom. We are holding support on our green trend line. We do have a higher low. We have a model suggesting that this could be a local bottom, although we could always break down. So just want to let you guys know, I am buying on support. I am buying the dip here. Hex may very well go on to break down simply because this price action is heavily bearish, and there has been no signs of reversal yet. Until we put in a higher high above here, we are still in a downtrend because we have our first higher low. But now we need a higher high. Now we need a higher high above 29 cents. In that case, we could make an argument that, hey, maybe the short-term downtrend is over, but we need two sides of that coin. Now, for the time being, we just have the one side. We have the higher low. Now we need the higher high. In that case, once we get the higher high, then we can have a conversation of this downtrend being over. But until then, this downtrend is still a downtrend, folks. And buying right now is kind of like catching a falling knife. But end, folks, with Pulse Chain quickly approaching the easiest 2x in history, Hex having amazingly bullish fundamentals, in my opinion, it is kind of hard to not jump on a 67% correction from all-time highs. And again, for those who don't know, I mean, I doubt any of you have made it this far in the video without knowing, but I mean, just to preach to the choir for a second here, folks, the reason why I feel okay playing this knife catching game with Hex is because Hex uniquely states that the purpose of Hex is to appreciate in value, and does that through some very interesting tokenomics, where Hex constantly incentivizes removing circulating supply through staking, where the larger, bigger, and longer you stake, the more yield you can earn in Hex terms. But not only that, it always gets more expensive to earn yield in Hex terms. Thus, you constantly have a market incentivization. You constantly have an incentivization for the price action of Hex to chase the value of something that only goes up. It is not a coincidence that the chart looks like this massive straight line up, folks. So while Hex may be short-term bearish, I would not be surprised that in 2, 4, 5, 10 years, we see a several tens of dollars, several hundreds of dollars Hex. And while it may take some time, I do believe that Hex is a coin worth playing the knife catching game for. Folks, I hope you enjoyed this video. Make sure you like and subscribe. Much more TA and news goodness coming down your way. Until next time, folks, take care.